All right. So we're going to do a market update. This is not going to be one of those fast ones where it's a 1 minute video with just a couple stats. We're going to sit and talk a little bit about where the market's at in Sanford, where we think it's headed, why, and how that impacts you if you're thinking about buying or selling a house in Sanford or the surrounding areas. So we're going to dig into a lot of the statistics behind the demand in Sanford right now and what that means for you if you're looking to buy or sell a house. So stay tuned. And if you have any questions, drop them in the comment, whether you're watching on YouTube or LinkedIn or Facebook, and we'll be able to put those on the screen and we can answer those questions. And if you want a copy of any of the stuff that we are talking about here right now, just comment market update in the comments, and then we will reach out to you individually and get you all those things. So first off, we're going to talk a little bit about the national headlines that are out there right now. Case-Shiller Index, home prices rise in February after 7 months of declines. So this is national news, right? That when interest rates doubled, it obviously impacted the real estate market, and that caused a lot of the markets in our country, which were super inflated after the frenzy that was 2020 and 2021, to decline, right? And for on a national level, this is useful information. But real estate is hyper local, and for a lot of cities, it's kind of a tale of two coasts right now. That in areas like the West Coast, we are seeing that there are declining markets, and in areas like the East Coast, especially North Carolina, we're seeing markets rise. So I also want to show you that population growth, in North Carolina trailed only Texas and Florida in 2021 to 2022. 133,000 residents, increase in North Carolina. Those people need somewhere to live, right? This all impacts housing, right? This all impacts real estate prices. And if you look at Sanford, the projections made by the state demographer's office show Lee County's population will grow from 63,000 in 2022 to 90,000 in 2050, an increase of 27,000 people in just 28 years. And I don't know what you think about projections like this, but I bet we outpace this, right? Because this is just based on projected developments and the developments we have going on right now, but 1,000 people a year. So when you look at the fact that we've approved over 10,000 building permits and you're wondering why we're building so many houses here, this is the reason why. It's that we have a big migration of people to North Carolina, and we have a big migration of people to Sanford as a result. So now let's get into the statistics in Sanford specifically. March average sales price, $339,219, which was down 1.8% from March of last year. Now, I don't like to look at any 1 month, too in depth, because it's a small sample size. If we look at the rolling 3-month average, the last 3 months, the average sales price is $338 on a single family home, and that's up 6.1% from $319 to $80 in 2022. So we also take a look at the trend line here, that the overall trend of housing values is still going up. So we might have any one given month where, because of some anomalies or some houses that sold that skewed the averages, we might have a decline, but we're trending up, and that has not stopped, right? So although that national article states 7 months of declines, that does not apply here in Sanford. We are insulated from some of the national trends because of all that we have going on here in our immediate local area. So I also want to show you that on this sales price, we have the ability to show you new construction sales price averages. Those have gone up pretty significantly. The new construction that they're building in the area, they're really pushing the upper limits of the price points in Sanford and Lee County, and they're still selling. They're attracting that Raleigh buyer over here, and they're attracting the people that aren't impressed with the resale market in Sanford. So that's jumped over $100,000 since 2022, which seems a little low. And it's up over $70,000 on average from the new construction that sold in 2021. And then when you look at the resale market, it's down about $50,000 from last year, but still up from 2021. And these are existing house resales. And again, not looking at just 1 month. If we look at that 3-month rolling average, the market's down about 19,000 18,000 in average home price from this time last year. So the other thing that we are going to take a look at here is the month supply. Right now, if we look at the month to month change of supply, first let's look at all inventory. You'll see, and this is where the new construction numbers really can skew the perception of inventory and the perception of what the market's doing here, is that we sat under a month of inventory for 2021 and 2022, and that's increased by 240% to 2.4 months of inventory in March of this year. That's a big increase. It's still a seller's market, but it's a big increase in inventory. But when we break down the numbers a little bit more, and you see that the resale market is only at 1 month of inventory, and the new construction inventory is at 7.8 months, you see that this is skewed a lot because there are a lot of new construction listings in our market. And those new construction listings are at various different stages of construction. New construction, right? New construction. And a lot of these houses, they can't be moved into immediately. You can't move into footers, you can't move into framing, and a lot of these are in various stages of construction. So just because they are listings doesn't mean that you can buy them and move in tomorrow, right? So the new construction inventory is way up, right? It's at 7.8 months of inventory, and the resale market hasn't changed a whole lot. It has increased some, right? But it hasn't changed a whole lot. So the other thing that we're going to take a look at here is the number of new listings that are hitting the market, and that on all construction types has remained pretty consistent from last year. If we look at the 3-month rolling average, it's actually up a little bit from last year. But again, if we take a look at the resale, there are not as many people listing their house for sale as there were in 2022. When we look at that rolling 3-month average, it's down pretty significantly, 30% less listings in the resale market than this time last year. Why is that? Well, it brings me to the next point that we're going to talk about a little bit, which is interest rates. We have sellers that are, locked in at a 4%, 4.5%, some of them lower than that interest rate. And right now, national interest rates are averaging 6.591% for a 30-year fixed VA and 7% on a conventional. That's the national average, right? The National Association of Realtors put out an article recently that says that economists predict a fall below 6% by year end, and they surveyed a bunch of potential home buyers and stated that the sweet spot was 5.5%, right? That 5.5% is the tipping point for many would-be buyers to come off the fence. They surveyed 1,300 homeowners and said that 71% of prospective home buyers who plan to purchase their next home with a mortgage say they are not willing to accept a mortgage rate above 5.5%. And so a lot of builders already, look at this data. They know this. That's why they're offering, different creative buy down options to buy down your interest rate and offering below market interest rates. But for resale properties, the good thing to know is that although your average rates are 6.59%, interest rates are hyperlocal also, and they vary from lender to lender. We are actually in the process of opening up a mortgage arm of our business as well, opening up a mortgage brokerage. And that's new news. It's probably the first time I'm saying it publicly here, but we're doing that because we want to be able to share with you a lot more info and help our clients with every phase of the process. So right now, interest rates with no points at one of our lenders is 6.045 on a VA loan compared to the average of 6.591. And what I want people to know is that if you're on the fence in terms of selling your house or buying a house right now because interest rates are too high, but you're that person that says, if they were 5%, I'd be all for it. I'd go for it. Well, you can get to a 5.5% interest rate it just costs you about one discount point, about $3,000 on a $300,000 home. In this scenario we're running here, $300,000 sale price, 285 loan amount, 700 credit score. So this is going to vary borrower to borrower, but $3,112 in discount points, and maybe you can get the seller to pay those, will get you to a 5.5% interest rate today. And that's a permanent interest rate, not a temporary buy down. And you can actually get all the way to a 5% or a 4.5% interest rate if you're willing to pay, almost $7,000 in discount points or $12,700 in discount points. And again, maybe you can get the seller to pay some of those if their house is on the market, longer than they want it to be. And for a lot of people, if you're doing a break-even analysis and you went all the way down to 5% interest and paid $7,000 in discount points, well, it dropped your payment by almost $200 a month, $190 a month, from $1,742 for principal and interest down to $1,552. And that is a big difference, right? $200 a month. You do a break-even analysis here. If you're staying in the house for close to 3 years or more, then it makes sense to buy that down if you are able. So for all those people out there who are in line with this, that they're waiting for that sweet spot before they jump back into the market, just know that you can create that sweet spot on your own. You can have a 5% or even a 4.5% interest rate permanent today. And so I think that, us educating the market on this is going to help some of those sellers who have lock-in syndrome, get off the fence and come back to the marketplace. The last bit of news I'm going to touch on is one that's in the headlines right now, which is that mortgage fees are changing on May the 1st. And some people, there's some misinformation right now about it, saying that if you have good credit, you're going to pay more for a house than if you have bad credit after May 1st. And there is some truth behind the idea of that statement, but there's also a little bit of misinformation. So essentially, starting May 1st, upfront fees for loans backed by Fannie Mae and Freddie Mac will be adjusted because of changes in the loan level price adjustments, right? So what does that mean for you, right? It means that if you have a higher credit score, you are getting a bigger discount, on the fees you're being charged prior to May 1st. And now that discount's going to go down. And if you have a lower credit score, then the discount that you were getting on or the fees you were paying on your loan are going to drop after May 1st, right? It does not mean that if you have a lower credit score, you're going to have a better interest rate and better terms than someone with a higher credit score. It just means that the gap between those two things is getting a little bit smaller, right? And some people are really upset about that. Let me know in the comments below what you think about it. If you've worked your butt off to have an 800 credit score and are mad that they're changing some things to sort of subsidize lower credit scores. Let me know what you think about it. Let me know, if you got a better solution for it, right? So for example, if you have a score of 659 and are borrowing 75% of the home's value, you'll pay a fee equal to 1.5% of the loan balance. Before these changes, you would have paid 2.75%. On the other end, if you have a credit score of 740 or higher, you would have paid a 0.25% fee on a loan. And now that's going up to 0.375%, which is a 50% increase. So now in our area, I can tell you that I don't think this is going to move the needle a whole lot in terms of the affordability of houses. Our average price point is a little bit lower than, the rest of the state and definitely the rest of the country. And in our area, we see a lot of government-backed loans anyway, right? A lot of VA, FHA, USDA loans in our area. So I don't think it's going to move the needle a whole bunch. So I'll give you a couple last-minute stats on the Sanford market, and then we'll end this. And like I said, if you have any questions at all, just let me know. Drop a comment below, even after this is aired live, and we'll get back to you with those. So the average the percent of sale to list price is basically 100%. Houses are selling for what they list for on average. The amount of shows to pending in the area it has gone down from 12 to 10 in the rolling 3 months. If we look at monthly, it's 13 to 9. And so houses are going under contract after an average of about 10 showings. Median. Average is 14. The amount of showings per listing is down. There are less buyers in the marketplace right now because of interest rates, right? There's 12.4 shows per listing in 2022. That's down to 7.7. So it might take slightly longer to sell your house right now if you're looking to sell. But by slightly, I mean very slightly. Instead of days, maybe it takes a couple weeks, or instead of one day, maybe it takes 6 days, to get an offer and go under contract on your house. So hopefully this was useful. If you're looking to buy or sell in the near future, then keeping an eye on the market, interest rates, the local real estate news is super important. You can follow us, on YouTube, LinkedIn, Facebook, Instagram, any of those things. And you can drop a comment if you need any more information. So I'm Walter Susevich, Sanford Surrounded, who helps you with your home matters.